Alright, Watchmen, welcome to this special edition video where we will decipher the scroll as promised. I know we don't have too much longer until we get the actual conference call, and Nate's going to be able to put a lot more light on this situation than I will be, but I did promise to do a deep dive on what I could find in it since I already did the video on red flags. And so here we go. We're going to cover 6 major points that I figured were worth talking about. And overall, it's really not that bad. It's and there was that initial sell-off when it first dropped. Now I think that's just because a lot of people saw a couple of the outlines of the red flags and didn't really read too far into it. But yeah, overall it's really not that bad. So let's get down to it. The first thing we're going to talk about is item 1A, right at the beginning. We're going to talk about risk factors. DVLT faces a pretty risky future. It's marked by a history of losses and a total deficit of around $377 million as of the close of last year. They're relying heavily on pretty much just 2 customers, Vivasor and Silex, both of which are actually owned by the same person, Henry G. Together, those 2 companies generated about 77% of their total revenue for 2025. And while DVLT holds a little over 92 million in Bitcoin to help pay for their near-term costs, the price swings of crypto assets make it pretty volatile and risky as far as a source of funding. So we need to keep our eye on Bitcoin prices. I know a lot of people have already been saying how Bitcoin is directly linked into Data Vault, and they definitely are. That's how they're more than likely going to be paying their bills going forward. Furthermore, we've already talked about this. DVLT has until August 24th to bring their stock price back above the dollar level, which we touched 99 cents twice yesterday, and it was not that bad at all. Now that I think about it, I didn't even get to do a video for the Nightwatch episode. I guess I'll have to, I guess I'll just skip that in lieu of this one. Sorry, everybody. It took me so long. I got home late, and it took me so long to read through that whole 170 pages. And then I had to decipher and take pieces of it, and what was important and what was not, and write up this whole script and try and get all this important information out to you guys. But we did hit 99 cents twice, I believe. And that was a very exciting day. But let's see. Alright, so risk factors is out of the way. Now we can move to item 3, which was something new to me, but it seems to like it's going to play an important role with this the whole Silex lawsuit too. Item 3 is a section called legal proceedings. There's a lawsuit mentioned there, and it refers to one opened very recently by the buyers of the shares that BNY sold. Specifically, Shanrong Li, Yingwo Ren, and Equirise Asset Management. They are suing DVLT for securities fraud, claiming that they bought the shares fair and square, and that by DVLT claiming that Silex is still the owner, they're committing theft, what they call conversion, is the legal term. This is bullshit, because they may have bought them, but it wasn't fair and square. They weren't supposed to be sold in the first place. Alright, hopefully Nate will shed some more light on the whole legal situation in a couple hours. Alright, now we can move on to item 7. It's titled the Management's Discussion. This is one of the red flags that I talked about in the red flag video. General and administrative, G&A, is about 3.5 times higher than R&D. This is not what we want to see in a tech company. But this G&A section is also where legal expenses live. So if Nate and Moyer can show us that this cost will drop after the litigation finishes, it's really not that bad. Let's hope we can get some clarification, like I said, during the conference call. Now on to some of the more important things that people are worried about is the going concern section. Now, if you actually read the entire section, it states that the going concern is alleviated. It's not eliminated, but it's alleviated. Now this is more than likely because of the Bitcoin holdings. Without that, DVLT would pretty much be unable to pay their current liabilities of, what is it, it's around 26 million, 26.8 million, I think it was, with just the $2 million they have on hand. As long as BTC doesn't tank, we should be good for the near future. So the going concern is not actually a concern. Now, the last two are kind of tied together. We can go to move pretty much down most of the document to the balance sheet. And the most important part of the balance sheet is going to be the shares outstanding, where we're going to talk about dilution. Now, part of the reason that price has been suppressed on top of the BNY liquidation is because DVLT has been diluting in the background to pay the bills. Around 32.5 million shares have been added to the count since January. And then now this was from the Maxim at the market offering. However, anybody claiming that NYIAX merger was going to crash the price is misled, and it's just FUD. Now, while those just under 80 million shares, 79 million shares will be added to the outstanding count, they're locked for a whole year. They're part of the paper count, but they're not part of the float. Now, the dilution they had, the 32.5 million shares, also means that the Maxim offering is almost exhausted, and that any additional dilution coming from that is going to be very small and pretty much insignificant. So dilution is, all of the dilution everybody's worried about happening has already happened. It's not, we don't have much of that to worry about going forward. Now, the last thing we're going to look at is after the balance sheet, there's a stockholder equity deficit sheet and a cash flow sheet. If we look at this section, there are three distinct lines of importance. The first one is proceeds from sale of digital assets. They've sold approximately $23 million in Bitcoin since January 1st. Alright, remember that, 23 million. The second line we look at is cash used in operating activities. They spent about 23 million more than they took in last year. Alright, so if you put these two lines together, this proves that they're utilizing Bitcoin to pay the bills. As long as Bitcoin can appreciate over time, then Data Vault is effectively a self-sustaining company. Now, third, we'll move on to it's actually before the cash flow sheet on the previous page, the stockholder equity sheet. Look at the line titled stock-based compensation. Over $71 million of DVLT's losses were simply stocks being issued to employees and not cash leaving the bank. If you take this number away from their total losses, DVLT is not doing bad at all. Alright, now to wrap things up, this 10K reveals a company that is fighting a war on two fronts, in the courtroom and on the balance sheet. But they've built a unique Bitcoin fortress to survive it. While the headline numbers like the 377 million deficit and the high G&A costs might look like red flags at a glance, which probably caused the sell-off, the underlying data shows that the heavy lifting of the dilution is pretty much behind us. And massive non-cash charges are there to put a mask on a much leaner operational core, which probably prompted the buyback, the return back to the mid 80 cent levels, whatever it was. So the next year, this year, will be defined by whether or not DataVault can successfully defend its IP and what happens with the shares in the Silex case. But with almost $100 million in Bitcoin as a buffer and a revenue engine that's starting to rev, like I said, the going concern is not the death sentence that the bears and the shorts want it to be. Let's make sure we tune into that conference call in a few hours and keep all these points in mind, because we're going to want to hear some of them being talked about and being addressed. The saga of this recovery is only just beginning. And until the end of all things, the Night Watch stands.